Let's take a closer look at the markets this morning and this week. Joining us right now for that is Ed Yardeni. He's Yardeni Research's president. Ed, we've got a big week coming up. We've got the Fed meeting that we've all been waiting for, followed by a couple other central banks that are going to be meeting this week as well. Are you expecting anything other than the Fed to cut 25 basis points?
Well, I wish they wouldn't, but they're not going to listen to me. They're going to do what they want to do. And what they seem to be signaling is they want to do 25 basis points. It's been increasingly described as possibly being a hawkish cut, meaning that they'll cut 25 basis points, and then Fed Chair Jerome Powell in his press conference will take back any notion that there are going to be a lot more cuts right away. I think there could be a signal that there will be a pause.
Why do you wish they wouldn't cut?
Well, look, I think the reason they want to cut is they have this perception that the level of the Fed funds rate is too restrictive, and that just doesn't jive with what the markets are saying. I mean, are they looking at? Do they have a screen in their office? They should see that the stock market's at an all-time high, gold is at an all-time high, Bitcoin is at an all-time high, and then of course the economic data is extremely strong. We've got real GDP at an all-time high, and it's been increasing around 3% on a year-over-year percent basis. Yeah, inflation has come down. It's closer to 2%, but it seems to be getting a little sticky here, kind of getting stuck a little bit north of 2%. But look, the goal here is to have full employment. Well, check that. We're around 4%, and we've got an inflation rate that's close to 2%. So everything, to me, suggests that interest rates are just about where they should be.
Yeah, the commentary that we've gotten from the Fed also gets into this idea that, OK, we're going to cut this time potentially, but then we're going to slow it down and look around because we want to see how things are changing. If that's the case, I'm with you. Why not wait and then cut in January if you think that there's still a need for it?
Yeah, and the last word we got from Fed Chair Jerome Powell was the economy is strong and we don't need to rush to lower interest rates. If that's the case, then why would you do something on Wednesday?
Yeah, I think I'm in your camp on that. Let's assume they go ahead with this cut.
Sure.
What are the potential dangers to that? I think the biggest one I could think of is that if inflation really does come back up, they're going to have to reverse course, and they're going to have more ground to make up for if you add this other 25 basis points now.
Yeah, I think there's a bit of a credibility issue here. I think more of us that are kind of looking at it from the outside, from outside the Fed, are kind of wondering where they're coming up with the idea that interest rates are restrictive, but the risk is a melt up. It's not exactly the end of the world. The problem with the word melt up is it clearly implies a meltdown. I mean, we'll know it was a melt up if there was a meltdown, but it doesn't have to be a repeat of 1999-2000. It could be a kind of a wicked correction. I don't think it's going to be a bear market because I don't see a recession out there. But meanwhile, right up ahead here, I think there's going to be a lot of selling in January. There's tremendous capital gains, and there might be more of them between now and year-end and the traditional Santa Claus rally. And I think a lot of people are going to want to rebalance their portfolios. Maybe they have too much NVIDIA, too much Apple, too much Tesla. And so there could be some significant rebalancing, which means selling. But on the other hand, there'll be some buying. But I think all in all, it will be an opportunity to buy, and I look for the market to end the next year at 7,000.
But the reason you think the selling will come is because people will wait till January so they don't have to pay the tax bill for another year?
I think that and the recognition that the Fed's done for a while.
Okay, that's an interesting point. Which is more important, the idea that the Fed may be done or concern about any... You know, there's a lot of enthusiasm in the business world about President Trump coming in with these new policies that are much more friendly to business. The concern on the other side of that is what happens with tariffs, what happens, can we get the tax bill passed again? All of those issues kind of like going from, okay, this is great in theory to, okay, now we have to work out the details.
I think that's absolutely correct. I think there's the theory and then there's the reality. And the reality has to deal with a lot of political intrigue in Washington. It takes a while to get these things through. When Trump came in during this first term, the tax cuts didn't happen until the end of 2017, and they weren't implemented until 2018. So it could take a while to get these things through. I know that the president and his advisors would like to ram through the whole program in one big bill. The problem with that is there's a lot of moving parts, and it's kind of like taking various medications for the same ailment and not checking out what the interactions are. So there could be some unintended consequences, some positive, some negative. But all in all, I think it does add up to a pro-business attitude, and I think the market has already discounted a lot of that.
Yeah, the 2017 tax package, those tax cuts, they expire if they are not passed again this year.
Right.
It's kind of been this understanding that, don't worry, those tax cuts are going to continue because neither side, neither Democrats nor Republicans, would like to raise taxes when it comes on some of these issues. But maybe that's a little too simple when you understand how the sausage gets made in Washington, how ugly that can be. The president does not have a big majority. It's only 3 votes. And actually, in the beginning of the term, it'll be 1 vote in the House. Has anybody kind of thought through what happens if those tax cuts don't get passed? Or is that just an unthinkable kind of like not being able to get a budget passed?
That's a great point, Becky. I think the fact of the matter is the founders came up with the systems of checks and balances on Wall Street and the financial community. We call it gridlock. And that's a conceivable scenario. It is a very close margin they have in the House. And it could take a while.